And Wall Street futures slipped and the dollar edged lower on Monday after Moody's downgraded the U.S. credit rating, citing growing concerns over America's towering $36 trillion debt. The move also poses a fresh challenge to President Donald Trump's agenda, especially his push for tax cuts amid mounting fiscal pressures. Listen into this report.
Moody's downgraded the United States' perfect credit rating on Friday for the first time in more than a century over the nation's growing $36 trillion debt pile. It's a move that could send ripples through global markets and complicate President Donald Trump's attempts to cut taxes. Moody's first gave the U.S. its pristine AAA rating in 1919. It's the last of three major credit agencies to downgrade the country. The first was Standard & Poor's in 2011. Moody's on Friday cut the rating by one notch to AA1, citing rising debts and interest payment ratios that are, quote, significantly higher than similarly rated sovereigns, though its outlook on the U.S. is now stable after it was changed to negative in 2023. On social media, White House Communications Director Stephen Jeung singled out a Moody's economist, Mark Zandi, for criticism, calling him a political opponent of Trump. Zandi declined to comment. He is the chief economist at Moody's Analytics, which is a separate entity from the credit rating agency Moody's. Since returning to the White House in January, Trump has pledged to balance the U.S. budget. But his administration's efforts to raise revenue and cut spending have so far failed to persuade investors. Elon Musk's Department of Government Efficiency has fallen far short of its initial goals to downsize the federal government, and attempts to boost revenue through tariffs have sparked concerns about a trade war and global slowdown, roiling markets. Left unchecked, such worries could trigger a bond market rout and hinder the administration's ability to pursue its agenda.